Welcome to the Investor Coaching Show. Here's your host, Paul Winkler.
Well, hey, welcome. We're not the monkeys. Where did that come from? I have no idea. Paul Winkler, Investor Coaching Show, along with Evan Barnett hanging out here with me today. And we have a lot to talk about. Boy, oh boy.
Nothing going on in the
Monday.
news. What do you mean?
Nothing's going on. Nothing's happening Monday. So are you in despair over TikTok or Evan? Or, you're going to have to close down your account? I mean...
It's going to cut my revenue in half.
It's going to cut your revenue in half.
I don't have it on my phone, and other than if I've maybe clicked a link on a Facebook post or something, I don't think I've ever been on TikTok.
People have sent me stuff that I've seen on there.
Okay.
Well, I was thinking about, maybe we ought to start up something where we have 27-year-old kids doing videos for us. I mean, remember that time I did that video? I had Casey actually do the video, and so those of you that don't know, Casey was a pretty young girl that actually worked with us, and I had her do a video. She wanted to do a video. I says, "Oh, okay, we'll have you do a video." It was the most watched video we've ever done.
Funny how that works.
That was just no fair. That was no fair.
I will say, and I don't know how far you're going down this road today.
No, I'm not far.
But, to me, separate from the national security stuff and the governmental stuff and all of that, I really think that TikTok is a fantastic example of the free market working. Some of the sob stories that I've been reading in some articles is these youngsters or middle-aged people pulling in $10,000, $15,000, $30,000 a month doing just random stuff. Like, God bless them. I mean, that's just It's really interesting that they could create that kind of revenue.
Yeah, I didn't realize that so many people depended so much financially on that. So
yeah,
it'll be interesting to see, because they're talking about a possibility of Monday doing an extension, 90-day extension. It's like, what?
Only if there's a sale on the table. I think they have to have a buyer that's at least made an offer before they can extend it.
Yeah, I don't know. I don't know where that's going to go. So, speaking of, this one of the things that we bring up as a topic every once in a while, a lot, because it's still out there. I mean, it's like joking. Chris Hand was in here and jokingly just decided he was going to ask me about Bitcoin for a commercial, and Paul, Bitcoin, gold, which one? And I was like, oh gosh, but it was a fun little thing that he and I had done, but it is still a thing that comes up so often that I have to address it on here. I feel like I've got to address it on here because there are so many people that look at that thing as an investment, and those of you that have never heard me talk about it, it's not an investment. There's no cost of capital. To figure out what something is worth, with investing, you have to have some kind of a stream of revenue that comes from it, whether it be interest payments, whether it be rent payments, whether it be earnings, companies, those types of things. And you can't put your finger on it, or it has to be something physical. There's something actually physically tangible, possibly even having a use that is outside of currency or something like that, like, for example, as
coal.
Yeah, coal. I can burn it. I can use it to heat my house. I can look at although that's becoming more politically incorrect every day. Wood, I can build a house with it. I can, gold, I can use it as in electronics or something like that, or wear it or whatever.
Right.
You can use it as a status symbol. So there was a guy that was on CNBC, I think he was on, and they were talking about the crypto and is it in a bubble? And I just thought his point that he made is something that I always like to make, but I like for people to hear it from another perspective. Here's what he had to say about that.
Not necessarily about my forecast in the piece, but yeah, I'm on the bubble side on net. To move me off that, you really need not a price change, but a use case. The three uses I've identified for crypto is speculating in crypto, war-torn countries, and paying cyber ransom. When we get a better use case than that, I don't expect this. Again, I'm probably net a bubble guy, but that's more on instinct. That's what could convince me to become maybe more of a crypto person when I find any use for it aside from speculation and criminality.
And I think this is a good point right there. And the thing that he made about war-torn countries, I think is a really good point, because if you have a country that does not have any kind of real reliable currency,
right, yeah.
and you want to be able to buy and sell things, you've got to have something that people value, even if it's as volatile as crypto. You have to have something that is of value, and that is in crypto. You know, we're talking about in that particular case, there are cryptos that are stable. You know, you can look at some of the ones that are more that they're pegged to a currency, an existing currency like the dollar, the stable coin or something like that, and you can make that case. But you wouldn't make the case that it's an investment,
right? And something that jumped out at me, and this is I think 3 or 4 weeks ago. And it was maybe when I was traveling because we don't have TV. Mm-hmm. And so that was we were probably watching TV in the hotel driving to and from my son's wedding. Uh-huh. And there were some ads for Coinbase, which is, kind of the exchange for some of this stuff.
Yeah.
The advertisements really were around things like Venmo, like, a vendor, a small shop, or a hardware store using a pay point where he can handle digital transactions. And it was kind of, to me, that starts to conflate Bitcoin is just as nice as using your debit card. It's kind of making it seem more acceptable.
A currency. Yeah, a currency type of thing. Yeah.
And but it was a very effective advertisement, but to me it was more about bringing your business into the digital age, not so much investing in crypto kind of assets.
Yeah. So that's interesting to me because I think that's right. And a lot of people, I just try to dissuade them from even thinking about it. But I see it in a lot of investment portfolios. You might, and a lot of people don't even recognize that it's in there because the advisor stuck it in there, and they don't even recognize that it's in their portfolio. But I would tell people, look for it. It tells you that there's probably something askew. My example that I give many times over was where Fidelity had their target date funds and their top holding was a commodities fund, which again is not an investment. Yeah. That was their top holding, the biggest holding. And then it just fell off a cliff. It was just horrible performance. And then all of a sudden they put it as, I think it was like last time I looked, it was like number 20. It was still in the portfolio, which made no sense to me, but the portfolio performance was so bad that they moved it down and they divested.
It shrunk so far it was the 20th
yeah, maybe. Yeah, that might be it. That might be it as well. And I thought I think it was the same guy that was actually talking about U.S. versus international. I thought he's made some good points about U.S. versus international. So when you invest, you have U.S. stocks, you have international stocks, and just recognize that U.S. companies have to pay, historically, they have to pay to use your money, and they pay through earnings. Now, if you're lending the money, bonds, you issue a bond, and then you have them pay interest, that's the cost to use your money is the interest payment. If you're talking about stocks, they're paying you the earnings. Now, and a lot of people don't think about it, but the reality of it is that international companies, they have to pay to use your money as well. And especially when you're looking at a period of time when there's so much uncertainty, typically the expected return would even be higher in those circumstances simply because of the uncertainty. You get paid more with more uncertainty. Risk and return are related. So this guy actually, he's dealing with U.S. versus foreign stocks, and it just made a couple good points in here. I just thought we'd both comment on, Evan.
Wrote a piece where a little tongue-in-cheek, pretending I was
35.
Yeah, pretending I was in the future, looking back.
But in the future, you said the global stocks outperform the U.S.
I did, because we are starting. You can think about it in concentration. I prefer to look at valuations. They're related. When when the U.S. is much more of the market, triple the market cap of Europe, chances are the U.S. looks expensive versus Europe, but it doesn't necessarily have to be, right? If all the earnings and cash flow and sales tripled, then the valuation ratio wouldn't necessarily go up. But the U.S. does look very expensive. It looks record expensive against the world. U.S. exceptionalism is something I do probably buy into a little. I think all exceptionalism is eventually arbitraged away in a competitive market. But But yeah, I do think the U.S. is in better shape. In my piece, I even said the U.S. continued to outgrow and be more profitable. But starting from record multiples against foreign, it did not win.
There's so much there. There's so much there to deal with. So what he's talking about is U.S. stock selling for very, very high prices compared to both earnings and the assets of the company. So when we look at it, we hear people saying the stock market's at record levels. So that can mean a number of things, right? When the Dow was at 1,000, that was a record level. And then when it went to 2,000, that was a record level. And when it went to 3,000, that was a record high. And, because markets go up and down. But in general, if you look at a stock market chart, it goes up from left to right, so it's at this slope going up, but it's jagged, it's up and down and up and down and up and down. So you can look at it and say it's at record levels, and that's meaningless because markets just go up more than they go down. But you can look at what the selling price is compared to earnings, because the earnings are going up, which is the bottom number in a price to earnings ratio, price divided by earnings. So in your fraction, the bottom number goes up. And if the bottom number is also going up, then the top number being a higher multiple of that bottom number might be something that people look at. And he wisely makes the point that, it can be justified if that bottom number goes up a lot. For example, you heard in the late 90s, rightly so, that tech stocks were selling for 100 times earnings.
Right.
And in hindsight, we go, that was way too high.
Almost infinite.
Yeah, and in some cases it was infinite, because they didn't have any earnings. That's exactly right, Evan. So if I'm looking at this as saying, it's selling for 100 times earnings, is that high? Well, it's way, way higher than normal because they normally sell for about 16 times earnings, right?
Right.
But if all of a sudden the earnings go up, like sixfold, if they go up fivefold,
yeah,
and then instead of 1 to 100, it's 1 to 20. So it's at least it's a little bit reasonable if the earnings go up fivefold.
Right.
Well, if you have a ton of expenses when you first start a company, it doesn't take much to get the earnings to go up if you just bring the expenses down or you just start to sell something. If you aren't selling anything, then you're going to be having nothing in earnings, and you're going to be putting all your money that's walking in the door as a business, you're sending it all out to expenses. And just the moment that you get past where you're going into positive territory, whereas your earnings are high compared to your expenses, or your sales are high compared to your expenses, hey, it's all cool. And then all of a sudden it doesn't look like it's overpriced anymore. So he's making that point that the earnings could go up. And he made some point, and I think this is really, really important, because you may be a person that goes, yes, U.S. exceptionalism. Yes, the U.S. is exceptional. Regardless of what some politicians will say. No,
right.
They're not. Come on. Really? No, we have a really good capital system in America.
For sure.
And the reality of it is we do have a lot going for us. And that may tell us that earnings will grow faster, or are likely to grow faster in the United States versus the rest of the world. But if the companies are selling for big multiples compared to those earnings, it may not be fast enough to justify it. And that's why he's saying, international, you might want to not forget about it. And I think that's the point that we like to make, is that recognize that good diversification means that if all of a sudden those earnings don't come through in the United States for one reason or another, whether it's competition, whether it's some unforeseen event that happens, that to us versus somebody else, or if all of a sudden our currency drops versus other countries, you could be looking at a case really, really quickly that U.S. gets significantly outperformed. And we've seen that in the 1970s that happened. In the late 1980s, that happened. In 1990s, U.S. won the day. 2000s, though, that happened. And it goes back and forth, and you can't predict it.
Right.
And I think that his point there is just to go, guys, don't forget about this stuff, because we have a tendency to look around us and go, wow, the U.S. has been exceptional over the past 10 years.
Right.
And it has.
Yeah.
Well, but not necessarily the case going forward.
Yeah, and you think about it, and I know you track numbers closer than I do. I think the last time I saw the U.S.
I get bored easy.
The U.S. PE was like at 28 and normally 16.
Yeah.
The last number I saw was like 28.
Just slightly over 20 right now.
And so I don't know what the international PE is, but I think it's below historic norms. Is it closer to 10 or 12?
But I think around 14.
14?
Yeah, somewhere. Depending, and then if you're looking at small international, you're looking at like 8 for the value, somewhere in that neighborhood. Yeah, it's pretty low.
Yeah, and so I picture there's somebody doing a broadcast or sitting in a corporate boardroom in the UK, in France, in Germany, and they're making a case for German exceptionalism or British exceptionalism.
When nobody's making that case right now. Germany's got a problem with immigration.
Some
that's been killing them.
CEO is trying to make that case, right?
Yeah, that's right.
And so, we always look at it through the lens of being in the U.S.
Ethnocentricity.
Right? And, so they're not all sitting around just kind of waiting and hoping that international stocks do well. They're doing the same thing CEOs do here. They just have a lot more room whenever they finally get their house in order. And it doesn't, just because international outperforms over some period of time, doesn't mean the U.S. went down. And I think a lot of times people think, oh, well, the U.S. isn't going to drop, so it will outperform. Well, no, it could still go up 10%, do great. If international's up 16, okay, it outperformed, but they both did good.
No, I think that's a point well taken, because we talk about dissimilar price movement when we talk about diversification.
Yeah.
And when you had the market recovery after, we had the tech bubble. I mean, good grief, that was a horrible period of time for U.S. stocks. Awful. 2000, 2001, 2002, and you had the technology stuff going down 70, 80%, and then you have the U.S. going down 40+%. And then you had this, and people thought, oh, man, that's dropped a lot. It's going to outperform in the future. And I got that phone call a lot on the radio show. And actually what ended up happening was just the opposite. It was, international, the smaller companies, the value stuff up 70-something%.
Yeah.
But U.S. did well, as Evan's talking about. It went up 28, as I recall. And wasn't terrible in 2003, but it was nowhere near what some of the smaller companies had done during that period of time.